Hello, Marc from ADM Investor Services International, with some thoughts this week on commodity prices and above all from the aspect of what's going on here in terms of supply chain disruptions and the influence that it's having on it, and also a little bit of context relative to the dollar. So the first chart this week is a familiar one. It's the Goldman Sachs Commodity Price Index. As one can see, we are practically back to the sort of levels that we were back in January of last year. It is a broad swath of commodities which have recovered quite strongly. I think it's worth contextualizing in terms of the performance of the dollar. So the second chart is the US dollar index. And I think the important part in this respect is to note that as much as the Goldman Sachs Commodity Price Index has been rising relentlessly, one could only really attribute a lot of this to a weakening dollar in the period between March and July, when the US dollar index lost about 10 points. Over the past couple of months, it's really only lost about 2 points net. So it's not the only factor contributing to it, but even if it has been an influence. The first of the commodity charts is the US soybean future. Agriculture has been an area of commodity prices which have been very weak, with heavily oversupply and big overhangs, but thanks above all to a recovery in China due to its for soy and soy meal, for pig feed, pork feed. This has recovered and is rising at very rapid levels to the sort of highs that we saw not so long ago, and which led to a sharp setback. Whether that's going to be the case this time, given there's quite a lot of supply chain disruption also involved here, above all in South America amongst the big producers in Brazil and Argentina, remains an open question. Then we come to chart number 4, which is the US WTI oil future. And as one can see, in essence, that has actually mirrored quite a lot of what the dollar did, though we have had a good spurt at the end of December and beginning of January in terms of oil prices. But it's probably more a reflection, obviously, of outlook for global demand. And obviously in recent weeks we've had some pessimism appearing as the vaccine related hope has been somewhat stymied by the fact that the infection rates are rising, and we've even had some occurrence of reoccurrence of infections in China, which has put a little bit of dampener on people's expectations here. Nevertheless, inventories are being run down there, and that's worth keeping in mind. My fifth chart is the copper future, and it goes together with the sixth chart, which is the US SOX Semiconductor Equity Market Index. As one can see with copper, this has been an absolutely relentless rise. Again, in the first instance, related to supply chain disruptions, but latterly also related to what's happening in the sixth chart, which is the SOX Semiconductor Index. And this is driven a lot by the lack of supply, or the deficit of supply, for semiconductors for the auto sector. And the auto sector recovery has obviously been an important part in terms of the industrial production recovery globally. So there is, relatively speaking, a strong demand here, and it's not just related to hopes for a global recovery. A lot of it is related to supply chain disruptions, and those supply chain disruptions may not actually evaporate once we get things back to normal. And I think that's an important thing to bear in mind with relation to commodity prices as we go forward.